Thank you, Miraz. So I've just put you on record, and now if you can go through the financial statements and give us a view.
A view.
Yeah, and basically what we learned yesterday, if you can see and just take us through those words, the new words that you learned, and say, right, this is where in the financial statement that they're using it, right? And you've chosen Honda, am I right?
Yes.
Okay.
I mean, I didn't find any new words. It's just
Right. So we have gone through, like, for example, if you go to the notes of the accounts,
notes.
yeah.
I can't find the notes.
Okay, let's go right to the beginning of the financial statements.
Yeah, okay.
Right to the beginning, the first page.
No, this is the first page.
Okay. So this is where there's talking about the consolidated statements of financial position, right? So the financial
Yes.
position is the balance sheet of this particular company, and they're giving the consolidated statements. So obviously they've got some others companies as well, so that's why they're talking about a consolidated statement. Correct. And you can see they have given the comparative years 2013, 14 and 15. Do you remember we were saying in the financial statements that by giving the comparative years you're able to, if you're an investor, you can see what's going on, right? So if you look at their total current assets, Mirage, what do you think?
Total current assets, it's increasing
Correct.
from year to year.
Yes, exactly. So, and we, at a glance, you're able to see what's going on here. And if I look at the total assets as well, it's increasing, right? And if I look at my liabilities, what's going on, it is also slightly increasing, and so is the non-current liabilities. So in the liabilities areas, is there anything that that's kind of glaring out? You can see, oh wow, this jumped quite a bit. Is there anything that you can see? The financing liabilities have increased, isn't it? If you look at
Yes.
it, yeah, both in the current as well as the non-current liabilities, the financing liabilities have increased quite a bit, yeah. And if I then look at your equity, right, and I'm particularly looking at your retained earnings, which has increased, gives a good indication, right? So you can see within this few minutes we're able to kind of get a understanding about this company, where it's heading towards, right? And because of the fact that they've given these comparable years, we can compare it with 2013, 14 and 15. If they had only given 2015, it's very difficult for us to kind of make a judgment call, isn't it?
Yes,
Now,
absolutely.
yeah, let us go to the next one. Right, here comes the income. They've given 2 years in this case. Right, anything here that catches your interest?
Non-controlling interests.
Uh-huh.
I didn't get that.
Right. Okay. So we've got some other lecturers here as well. So let me just ask Andrew here, who is one of our other lecturers, to say, Andrew, what about non-controlling interest? What do you think that is? Let's see if Andrew is. Andrew, you may have to switch on your mic. So till Andrew comes on, let me just explain this to you, right? So
I'm here, Anju.
Okay, brilliant. Okay, go on.
I just missed you for 2 seconds. Just tell me what you were asking.
Yes. So Andrew, I was asking you. Miraz looks at in this particular statement. He says, "I can see non-controlling interest." What is that? So, and also taking into consideration that this is a consolidated statement, right?
Yes.
That means we've got more than one company, isn't it? Sorry, I think Andrew, there is some disturbance from your end. Till it gets sorted, I'll continue. So what this consolidated, let me explain this to you guys. Now, consolidated statement means this particular company has interest in other companies as well, and they have maybe ownership of more than at times 100%, at times less than 100%, right? If they have less than 100%, that's where and especially if it is less than 50%, that is where we showcase in the statements this is the non-controlling interest, right? Now in this case, what's happened, Honda may be owning XYZ company maybe 40%, right? In this case, this is a non-controlling interest, but you have to show it in your financial statements as well. Andrew, anything that you want to add here? Right, I think Andrew is having a bit of problems there with the audio.
No problem. No
Yeah.
problem. I got it.
Right.
It's
So
like,
Miraz, is it clear for you?
yes.
All right, brilliant. Let's go to the next one. Right.
I think this is not necessary.
Yeah, no. Anything else here? Change in equity. Yes. So again, this is a statement of change in equity, how the equity of that particular company has changed during the years, right? And whether it's common stock, you can see the capital stock, treasury stock, all what's related to the capital and the equity part of it, how it's changed over the years. It's important that you need to showcase this, right? And the next one. The cash flow statements, okay. Of anything that we learned yesterday, any of the words, anything that comes in here, Miraz?
Yeah, changes in. No, we did this like way back, cash flows.
Yes, yeah, in
Yeah,
your
trade receivables, changes in assets.
correct, yeah. Let's go into the next.
No, I think that's it.
That's it. Okay, hang on for a second. Segment information. That's something interesting. Right. What is the first, that paragraph, what does it say, Miraz?
Honda has four segments:
Right.
motorcycle, automobile, financial services, and power products.
So they're clearly stating, giving the reader, right, an insight into the four segments, right, and the reportable segments. That's very important, and they're showing the reportable segments very clearly, right? And why do you think they do that? What is the reasoning behind it?
so that they can concentrate on each uh, for efficiency, basically.
Yes, and if you're the reader of this financial statement, what would you gain out of it?
Uh, you can find out whether they are working in an organized manner.
Yes, what area is making most amount of money? What is the return on investment on each of these areas? Right? So I can see this is a really good statement, financial statement that you picked up, because keep it with you. We'll come back to this in the next classes, because you can see the first section, they're talking about power of dreams, financial highlights, to our shareholders, review operations, corporate governance, and investor relations information, right? We are only looking at the financial section of it, but actually it's giving more insight in the company if you go into the power of dreams, and you know where they're kind of heading towards. Okay, so I just want to anything else? I've just put you on mute, Miraz, because there was some background noise, that's why. Well, I think, Miraz, you've done a great job. Thank you, because it kind of highlighted to you one couple of areas that we are interested in doing. So I'm going to take over from your screen now, and what I want to do is actually speak to Anastasia, who's there, find out whether if Anastasia has got something to showcase to us. So hold on for a second. I'm going to take back the screen, and 1 second. Okay, Anastasia, let us start by sharing the screen.
Okay. Can you see now?
Yes, brilliant, thank you. What's the company that you took?
It's Marriott International.
Right, yeah.
Okay, can you see that,
yes, right? Yeah, I can.
The
certainly.
Consolidated balance sheet, right?
Yes.
Okay, correct. Yeah, so here it's pretty much the same. We compare 2014 with 2015.
Mm-hmm.
And here you have your assets and liabilities.
Right.
So we focus on what?
So yeah, one of the things that I can very quickly say here is liabilities and shareholder deficits. It's come down drastically from 6.8 in 2014 to 6082. But what we were focusing on was see if some of the terminology that we learned yesterday, like the going concern, prudence concept, some of the terminology, accruals, prepayments, whether they are there in any one of the notes to the accounts. Now I can see some notes to the accounts in accounts and notes receivable, right? And similarly, there are you can see some notes. So let us go down in the financial statements to see if I can spot anything there.
Okay.
And here, sorry, if you can stop here for a minute. Now here, again, very nicely, they have given to 2013, 2014, 2015, right? the years so that you can compare very easily. If you had given just December 2015, I don't know whether we are doing good or bad, right? Because there's nothing to compare with. Right, let's go down. Again, you can see similar format, right? There you go. You can what Mira showed us and what Anastasia is showing, something same kind of formats, right? So that is where that harmonization that we spoke about yesterday, that comes to being. Let's go down, Anastasia. Thank you. Right. Basis of presentation. Can I stop there?
Sure.
Now, what does it say? I can't read it.
From the beginning?
Yeah. Operating, yeah. So, sorry, I can read it. I will help you out here, because what it states is about the financial statements and the Marriott, the company, what it means, right? And also they talk about the consolidated statements and the currency that they're using as well, right? And if you go to the second paragraph, it's again clearly stated: preparation of financial statement that conforms with US general accepted accounting principles. So again, it gives the reader to an understanding to say, well, you know, what type of rules is this company following, right? The accounting rules, the regulations. And it clearly states it's following the US GAAP, right? And it says GAAP requires management to make estimates and assumptions that affect the reported amount of assets and liabilities as of the date of the financial statements. So very quite explicit in what they're doing.
Shall I move?
Yeah. So the fiscal year. 1 second. Revenue recognition. So again, how have they recognized the revenue, right? Because different types of revenue are there. How have they recognized that, right? The rewards program. Now, rewards programs is, I'm just picking up something down here, is saying rewards program. How is that? How does that work? Because this again, guys, is a lot of money, right? When it comes to, if you talk about Skywards, if you talk about the Marriott's rewards program, right? So Anastasia, do you know how the rewards program works, or how you account for that?
Well, technically, yeah, but you're accumulating points and then you can redeem that.
Yes.
So that makes comeback customers and generate more money, obviously.
Yes.
And which brings money as well.
Yes. So that means that too needs to get accounted, correct? Because you're giving rewards to these customers. Yeah. That also comes in the accounting framework, and we have to account for it. So if you now, when you guys go into, like, for example, if when you fly out with Emirates, you will get Skyward program, right? You get Skyward miles. If you use your credit cards are sometimes linked to Skyward miles and to the hotels like the Marriott points, right? And there again, even though you do not realize, there is a lot of accounting that goes behind the scene. Okay, and this is where you can see they are talking about this here. So it's really, really important. This is very good. If I mean, Miraz and both Anastasia, if you can put these things up on your Facebook as well, right? This is really good content, because I know both these statements, you've got it off the net, right? I'll send you the links. Yeah, fine. Sure. Anything else that it catches your eye here? Anything that you can talk about?
I don't know, it's really complex statement, really long.
Yeah.
Indeed.
Did you search for any of this prudence concept, that kind of words, or going concern? Did you look for those?
Not really. But I
Right.
just had a quick
Right.
look. Yeah, it's
Yeah.
really complex.
Yeah, so the easiest thing is because you can just search for it, right? So just control F and search for it, like prudence. Where have they written anything about prudence? So you do control F and do prudence and see, does this word come up somewhere, right? So if you can do that, just check if it comes through.
No, cannot find anything.
No?
I cannot even type. Wait just a second.
Going concern. Is that there?
No.
Right, okay. So that would actually should come in the accountant's, the accounting, the report. Okay, maybe it's somewhere there embedded. Not sure. So let us. I think it's a great job that you guys have done. Did you see anything else that you want to talk about with this, Anastasia? Is there anything else?
No, I think that's it.
Okay, fine. Now I'm gonna take the screen from you, and thanks for your contribution. Is there anybody else who's done some work like that? Right, okay. Now what we're going to be doing is go into today's session. So today's session is going to be even more interactive than yesterday, if that was possible, because what we are going to go through is how we record transactions in a company and how they go through into the general ledger. Okay, so 3 areas that we have to go through today. The first area is we will look at some accounting concepts, again, some terminology, right? The first part is the terminology aspect of it. We'll look at that. The second part, we will look at the transactions, and the third one is how it will go into the general ledger, right? So I'm going to be creating a scenario and assigning you roles, and through those roles we will understand how we are going to be creating these transactions. Okay, so first I will go through this accounting terminology aspect of it. I will share my screen with you now. Right, now I guess you can see my screen now. Okay, so there are various terminologies, and we would like to actually talk about them to you just before we go into our transactions, right? And actually we went through some of it yesterday, so it kinds of we are redoing what we did yesterday. Why do we use the accounting? What is the reason why we have this accounting, the whole accounting logic, right? Why do we have this? And we said how important it is for certain various stakeholders, and you just saw now with Miras's and Anastasia's examples what type of information comes in those financial statements, right? Quite detailed, in fact. And it is important if you are investing, whether it's $1,000 or 10,000 or $1 million, right? It's important because you are going to be part of the owners, right? So what is financial accounting? It is basically looking at producing the statements for external users, right? This is the most important thing. Investors need to be able to choose which companies to invest in and compare their investments, right? So I might ask you the next time, I would show you some companies and ask you, well, where do you want to invest in, right? This is important for us to understand. So in order for you to determine where to invest, you need to be able to read the financial statements. That's what we're doing. IAS and IFRSs are there to reduce differences in the way the companies draw up their financial statements. We just saw that right now. So imagine Marriott is bringing a consolidated statements, right? Whether it's balance sheet or the financial statements consolidated, it will bring from different parts of the world and then to showcase to the investors, right? So investors and all the other stakeholders who are interested. So in this case, you need to have the harmonization, or all the locations should have certain rules that they follow. Okay. Now, management accounting. So tell me, I will ask this question from Anastasia first. What type of things do you think are there when it comes to management accounting in the Marriott? What type of items do you think you will be doing, the activities you will be doing? Now, when it comes to financial accounting, obviously we will take transactions, we'll record the incomes, we'll record the expenses and record the transactions. But when it comes to management accounting, what would you guys do at Marriott? What type of things do you think? Anastasia? Yeah. Anastasia says occupancy, revenue analysis. Yeah, right. Okay, that's very, yeah. Anything else?
The price information per available room. Yeah, all basically what differentiate us from the competitors.
Yes.
Within the hospitality industry, so we can track and better understand what we're doing wrong or right.
Yes, exactly, and that will be very internal focused, isn't it?
Yeah.
Right, because this is not the kind of information that you're going to put it to public. Okay, because this is very confidential information, in fact, and this is where we make the difference at Marriott, right? We will
even the rewards program can be there as well.
Sorry?
Even the rewards program can be there.
Yes.
Like how we're doing with our repeated customers.
Yes, exactly. So there is a lot of analytics that happens there, right? You will have a lot of analysis going on. You will use a lot of computer power and computer systems in order to help you determine certain decisions, right? So management accounting plays a significant role, but of course financial accounting is a must. That will give you basically what has taken place in the past year or the past month, right? Now, types of organizations, we get different types of organizations, right? So companies, not-for-profit organization, public sector entities, etc. And different organizations, their objectives would be different, right? So private organizations, and you will get most companies having profitability as their primary objective, right? Whereas there are certain non-profit organizations and even schools, their objectives are very different when it is not driven by profit. So can I ask a question from Miraz, right? Now, I know, Miraz, you're one of the university students, isn't it? Miraz, are you able to talk to her? Yes. So if you can unmute and just have a conversation with me on this types of organization and about the university. So let us pretend that your university is a not-for-profit organization, right? If it was a not-for-profit organization, what do you think the main objectives would be?
Charity.
Okay, so what is the objective of that organization? What is the purpose of setting up that organization, a university, and
Not for.
and you know what would be some of the key elements? Any idea?
To provide good quality education
Very good.
for uh, students and
Yes.
working professionals.
Correct. Yes, correct. So immediately, my good quality education, the number of people who are passing out, those are very important for this organization, because I'm not looking at, yes, you have to run an this organization has to cover the cost, but the focus is not on profitability. Right now, when it comes to SEMA as well, it is a non-profit organization. So that means they will. What do you think SEMA's goals are, Miraz?
To establish uh, wait,
I'm getting you think.
I don't.
I'm getting you to think. So, what did SEMA
It's
come
like,
and give you? We came over there, right? I remember coming to Middlesex
for
University.
helping companies hire professional accountants.
It's basically trying to broaden the brand name and also tell everybody, or create that awareness and have a bigger professional body, right? So once you create that awareness and then bring about also some kind, very good standards to the world of professionalism and into management accounting in particular, right? So that's what their main goal is. Now, they really don't care about making profit. Profit is not the goal. The goal is how many students have we got, how many members have we got, what is the pass rate, where have we gone into, right? Now let's look at in China, right? China is one place that they're going in very deeply in to create awareness. That is one of their KPIs. So what is a KPI? What do you think a KPI is? A key what? Anastasia, any idea what is a key KPI is? A key performance indicator, right? So in an organization, KPIs are very important, and the KPIs are there to drive your performance, whether you're a not-for-profit or profitable organization. It really doesn't matter. Okay, thanks, Miraz. So we looked at financial, and we will look at also non-financial objectives, right? And these days, it is very, very important, these non-financial objectives, and it is there in your financial statements, that booklet, right? So Miraz and Anastasia, you will see in that booklet, they will be talking about these are the CSR activities, corporate social responsibility activities that we've done, right? So they will, and it's getting more and more popular, organizations talking about it, right? So CSR is very important. So Miraz, any idea what CSR is? Any views? Anybody? Yeah, Miraz, give me an example. Sorry, I'm picking on you.
Like charity work, like
Correct.
or organizing marathons,
Yes.
or like taking care of the environment.
Exactly. Yes, that's right. So gone are the days when the organizations can think, oh well, my sole purpose is profitability. I'm going to look into that and then look at how to get profit irrespective of everything else, right?
It's basically
Yeah.
It's basically just to improve the reputation. Like the people will think they don't care about themselves, they care about others also.
Yes, exactly. So it's important for an organization to be a good corporate citizen, right? Just generating profit is not good enough anymore. Right? That's the non-financial objectives talk about. So these are the financial objectives. It's very clear. It's easy to kind of define them. The KPIs, key performance indicators, are these, right? We were saying, example, increasing earnings per share by 5% and so on and so forth. It's easy, right? But then we look at objectives for non-commercial bodies. We just now spoke about that. The non-commercial bodies, you need to look at the 3 E's: economically, efficiently, and effective, right? How they obtain funds and the utilization of funds. So I just want to ask, just see whether Andrew is able to talk on this slide. Anything here that Andrew would like to add, if he's audible? Let's see whether his mic is working now. Andrew? Andrew, are you able to talk to us? I think still he's got a problem. Let's see. Let's go on. So we looked at the public owned enterprises, right? The government's departments do not operate to make a profit, and thus objectives cannot be stated in terms of profit maximization. So what about our RTA? What do you think they are? What do you guys think? The RTA. It's a government organization, right? Anybody who wants to comment? Anastasia? Yes, Pratik. If you're able to have a conversation with us, jump in and unmute the mic and let's have a conversation, because then things will get quite interesting, right? But of course, make sure you don't have background noise, because this will also help you to understand the subject more easily, right? Anastasia, anything from you?
The RTA?
Yes.
I think it's a non-profitable organization, no?
Yeah. And so where do you think they get the money from? Where do you think?
Government?
Yes, so the government will give them money, as well as from where? What else?
What do you mean? Where the money coming from as
Yes,
well?
yeah.
Apart from government?
Mm-hmm.
Fines? I don't know.
Yes, of course. The fines are huge nowadays. Somebody was telling me the other day they got a speeding fine of 600 dirhams or something, which is a bit crazy. Yeah. And also people using transportation. Yes, thank you. Yeah, Mira says he's also got a fine. Right, yeah, that's so funny, isn't it? Yeah. So they're very good at these fines and collecting money. And but in return, what do they give us? What do you think they give us, Anastasia?
They provide with public transport.
Mm-hmm.
So basically creating the community for UAE.
Exactly.
Providing with taxis, metros.
Yes. Yeah. That's very important. You actually gave some really good comment there, right? Because without the infrastructure, without really good infrastructure, it's not possible for UAE or Dubai to be where they are, right? If you go into some of the world's best cities, you will see the public transportation is very high standard, right? So in order for Dubai to be at that level, this is one of the key things that they need to have. If you look at Dubai 20 years ago, none of these were there. The public transportation was not there. It was very minimum, right? It had only maybe cabs, right? So now you can see how well the metro is utilized, right? And also the infrastructure, it also helps the other industries as well, like for example the hotels, right? And every other thing. It really is kind of the backbone. So it has to be, and we have to use the 3 E's, right? What are the 3 E's? Do you remember? Anyone? Economic? Yeah. What else? Another person? Efficient? Yeah. And effectiveness. Yes, that's right. Very good. Thank you. So I hope you guys got, it's very difficult to kind of understand when you what the objectives of a non-profit oriented organization, because a company that's profitable, whose objectives are profit, it's easy to get their goals. So now we go into businesses. Every business will have transactions, whether you're operating a profitable or not for profit, either they will have transactions, right? And we also have financial reporting, right? And all these the transactions need to have supporting documents. You can't come up with a figure from the thin air and say, oh well, I've got a revenue of 10,000, or I've got an expenditure of $5,000, right? There has to be very clear documentation behind it, and the documentation proves actually that you have genuinely made that transaction, as well as for our auditors, right? So it's important. So the information needs is required. We went through this yesterday to various stakeholders as well. Right, now let us go into our next one, recording of transactions. Right, for this, what we are going to be doing is playing a little bit of a scenario. Okay, so yesterday I remember you guys wanted to open a restaurant, right? And you want to sell Chinese and Indian food. Now I want another business, please. Anastasia, what about you? Come up with a different business model, let's say. If you can tell me some business that you want to start, let's say, because we're going to go through all our transactions through this business. Mira says real estate. What about you, Anastasia? What do you think? Hotel. Right, okay, we'll go through both. Right, we'll go through both. Real estate is a bit easier than the hotel, so we'll start with an easy one. Okay, so what I would like you guys to do at this point is come up with income, right? For real estate, what are the top 3 to 4 income streams, right? And let us see for a hotel the income streams as well. Now I'm going to hang on for a second, I'm going to start chatting with you on Facebook now, right? So let me go take this screen from you for a second. Now think about income streams, as well as I will be looking at some expenditure as well. Okay, so let me go, and I'm on the Facebook now, so let me share my screen with you. If you can go to the Facebook page. So let me say, what are the key income streams for a real estate business? Okay, and at the same time I'm gonna ask what are the key income streams for a hotel? And you can be as creative as you want, okay, because there are many ways that you can create income, right? So Miraz has replied just now, so let's jump in and reply, guys, because it's important. Yes, rent, billboard, very good. What else? Sales of residential properties, of course, and rent. Yes, any others? Be creative. Don't think of only the obvious income, okay? So what are some of the ways that you can come up with? Right, investor advertising. Investors advertising, yes, of course. What else? I'm looking for something. You guys have not come up with it as yet, right? Let us say, which is not very straightforward, but it's there. What about consulting? And what about moving services, right? So different businesses, income streams you can get, okay? Now let's look at the hotel. Yes, Pratik has said gym memberships. What else? Let's go for it. I need some creative revenue streams for this hotel. Let's go. And especially, we have got lots of hotels in Dubai. Yes, a spa, of course. Booking for conference halls, restaurants. Yes, restaurants is interesting one, because the hotel can run the restaurant, or the hotel can give others to run the restaurant for them. Let's say, for example, Jamie Oliver has a restaurant, right, in Jumeirah Beach Hotel. So transportation, yes. So I like to find out, Miraz, when you say transportation, what sort of transportation are you talking? What do you mean? If you can elaborate a little bit. Service apartments, yes. Limo services, yes, very good, correct. You know, I have a student of mine who's running a limo service here in Dubai, and he has something like an Uber, right? Does not own any cars himself. He knows the owners of very fancy luxury cars, and these cars are not used all the time. So he runs this service where he's got customers that he gets, and he knows the owners. So he runs this service not only with cars but also with yachts, right? So you're right, the limo service is fantastic, because people come here to have a different experience, right? When you come into a really luxurious 5-star, 6-star hotel, you can pamper your guest and give them a very different experience, and people are willing to pay for that, right? So you guys have got great ideas. Now let me get some expenses for our real estate. So expenses for real estate business. think of something. What are some of the key expenses for real estate business, right? What are some of the key expenses? Because after this we are going into transactions. And what are some of the key expenses for the hotel? Go for it. Let's see. Yeah, salaries, commission, office rent. What else? Registration fees. Oh yes, that is a huge amount of money they pay, isn't it? Yes, registration fees, maintenance, of course. What else? What about advertising? Right? They have to do a lot of advertising. So that's one of the key ones as well. Yeah. Then let's jump into our hotel. Anastasia, give us some key expenses. Let us see. What are some of the key expenses in this hotel? Let's see. Furniture, right? Yes, it's very expensive, this furniture. And this furniture expenses, tell me guys, is it going into your OPEX or CAPEX? What do you think? Where would the furniture go into? OPEX or CAPEX? Reply to Pratik. Yeah. CAPEX, yes, correct. Good supply, yes, and what else? And again, there are some similarities to that of your real estate, right? Because here again, salaries, maintenance, right? All those will play a part. Gym trainers. I think, Miraz, you like going to the gym. So, yeah, the gym trainers. What else? Anything else, guys? Right, now comes our tricky part. Okay, now we have identified our income and we have identified our expenses, right? Waiters for the restaurants, correct. These are all as will come as salaries. Now, the tricky part is we have to record these, right? When we are recording these things, now let us see. We will get income, right? In the form of what? We will get income in the form of cash or credit, right? So people will pay us either cash or credit. Now, I want to see whether I'm just going to stop sharing my screen with you for a second. And then I want to see, I'm going to open a whiteboard. I want to check if you guys can see my whiteboard. Right. So, can you guys see the whiteboard? Yeah, can you see it? Okay, brilliant. Thank you, Miraz. So, what I want to do is I'm having income. Oh, this is not fun looking at it in, let us put blue color. Now, income, right? Income we will get which way? Cash and credit. Cash means we will get, that's great, right? We're getting cash immediately. Credit means people will pay us later. And generally, what sort of people will pay us later? Let's say, for example, in a hotel, Anastasia, who will pay you later? Individuals will pay you in cash straight away, cash or credit card. But certain type of customers, we have to give them credit. What do you think? Who are these people? give a clue, right? Loyal customers, yes, loyal customers, or corporate customers. More than loyal customers, it's a corporate customers, right? Like, for example, who are these guys? We will say real estate, sorry, not real estate, these corporate customers, these are key guys, right? That will pay, that we will give them credit. Now, when we get money, what happens? What happens? Something gets debited, something gets credited, right? Now, when we get income, we will debit something, and something is what? Any ideas? Debit cash, very good. And then credit what? Credit what? Any ideas? Income, yes. Now, for the guys who have not paid us, right? For people who have not paid us, what is the debit and what is the credit? Can you tell me? Where does the debit go? Where would the debit go? Debit receivables, correct. No, it's not aligning, but that doesn't matter. Debit receivables. And credit? Income. So actually you can see it in both cases, right? Even if you paid or not paid, from a hotel's perspective, we are going to credit our income. Okay, now let us look into expenses. Whatever the expense is, okay, whatever. Now you guys said let's look at one. Let's look at salaries. It's applicable for both hotel as well as the real estate, right? So salaries, now that's an expense. What would I debit? Where would I debit this? Salaries. Yes, we can go debit the wages, right? Wages or salaries account. Where would I credit it? Where would I credit it? That's right, the bank. What if I have not paid the salaries for the month, but plan to pay it next month? Where will I credit this then? Correct, right? Say salaries payable. And where will this go and sit? Where will it be? Profit and loss or balance sheet? Very good, Anastasia, fantastic. Balance sheet, right? So is this clear for you, right? Now any expense, whatever the expense is, these are going to be your transactions, the debits and the credits, right? If you have not paid for it, it will go and sit as a payable in the balance sheet. If you paid for it, your cash is reduced, okay? And if you're recording any sort of income, if you received cash, it will go into your bank or cash. You will say debit X amount. If you have not received it as yet, it will be under receivables, okay? Is that clear for you guys? Is that clear? Because what I will give you is some questions now. Okay, so get ready for some questions, right? We will jump into some questions. Now, give me a moment. Let me go to my screen and I'm going to my whiteboard. Now, what I want to do is, you guys can see my whiteboard, I guess. Now I want to record some assets in the real estate business. What do you think would be some assets? Anastasia, if you can just put it in the chat box, what would be some assets? And what about Miraz and Asim? If you can very quickly, we got some others as well, Pratik, and if you can very quickly put up in the chat box, what are some of the assets? Furniture, office, what about it? Office what? Office equipment, correct. Building, assets, inventory, saying inventory will be current assets. Okay, inventory, this is non-current assets. Okay, cars, correct. Now we've got some assets here. We've got furniture, office equipment, building. Now all of this will be applicable even in a real estate, right? So now I want to find out, I'm going to buy some furniture. Okay, so I want Miraz to be the furniture shop owner, and I want Anastasia to be, Anastasia to be from the hotel, right? She's gonna purchase from Miraz, right? So what happens, Anastasia? Now in your case, you're gonna purchase furniture, right? What is, Anastasia, tell me, what is your debit? What will you debit? Now you're buying some furniture from Miraz's shop. Okay, we will debit fixed asset, furniture, correct. And this is acting a bit weird, so let me try again. Why it has to act like that? Debit furniture, and credit bank. Or if you've not paid, if you have not paid Miraz, where would it be? Payables, right? Credit Miraz furniture shop, payables, correct. Now let us go into Miraz's side of things and say, Miraz, now you got, what have you got coming through? A sale. How would you record this sale, Miraz? Can you tell me? What will you debit and what will you credit? Debit cash, and credit income. If the buyer does not pay you, where would you record it? Where would you record it? Debit receivables, very good. Perfect, right? So you guys are quite good. Right, Pratik is saying credit sales, right? Correct. So I can call it credit income or sales. This could be called income or sales. So Pratik, you're right. So at times we can call it revenue, at times it's income, one of the same things, right? Income, revenue, sales, same meaning. Okay. Now this is actually the most difficult part for people to understand. If we've got the basics right, the next parts are very easy. Okay, whatever it may be, the business can be anything, the transactions are going to be the same. Let's say you guys go to coffee shops, right? Quite often. Now, when you go to the coffee shop, what do you buy? What do you guys buy in coffee shops? The customers buy what? Coffee. That's about it. What else? Coffee. What else do they sell? Food. At times clothing as well. Mugs. Right? What are these mugs and things? Merchandise. All kinds of things they get us to buy, right? Okay. What happens to your money? What happens to your money? Your money is reduced, right? And what happens if you are the owner of the coffee shop? What are you getting, right? So from a coffee shop perspective, what is he getting, right? What are the coffee shop owner's entries, right? Income, correct. Income, we all know, where does it go? Debit or credit? Guys, debit or credit, the income? Credit, great. Credit, income, right? And this case, cash, straight off, right? They won't accept anything else. And then debit. So this is a bit misleading, the cash bit. Sorry, because I should have said, what I meant to say was you're going to get cash, but in this case our cash or bank balance or bank account, that's where the money is going to go into. Okay, is that clear? Now in a coffee shop there are lots of expenses, right? So let's say expenses in a coffee shop, what are they? What are the expenses in a coffee shop? Salaries. Yeah, what else? Give me, we've worked with salaries before. Give me something else, another expense that we can work on. Decoration expenses. Yeah, tricky one. Okay, another one. Decoration expenses. Yeah, what else? Expenses. Let's take this decoration expenses. Actually, this is a good one. Decoration expenses. Now the trick here is, okay, I think I had to go to another whiteboard for some reason. Okay, let me get out and come back again. Hopefully I'll get a new whiteboard. No, okay, I've got a new whiteboard now, so that's good. We'll talk about coffee shop expenses, decoration. And let's think this decoration expenses are like 100,000, right? It's nothing is going to come cheap. Let's say it's 100,000. Now, where do you think this will go? Into our profit and loss or to our balance sheet? What do you think? What do you guys think? Decoration, balance sheet. Right, Pratik says profit and loss. Miraz says profit and loss. Right, Anastasia, why do you think it is a balance sheet item? Any reason? Let us see. What is the it is a big amount, correct, right? Anastasia is correct here because this is a big amount. Now, decoration item could be in a profit and loss as well. Let's say the amount was like, I want to paint the walls. It's $5,000, right? Small amount, no big deal. Put it into the profit and loss, maintenance expenses, okay? But 100,000 is a sizable amount, right? Then you need to put it into the balance sheet. Now, what would be the entries? What would be the entries? Let's say debit what? Where would the debit go? Fixed assets, right? So into fixed assets, right? Maybe let us pretend it's part of furniture fixtures, right? You're decorating, so part of furniture fixtures, fixed assets, furniture and fixtures, right? So furniture and fixtures. Okay, credit, where would it be? Where would I credit it? Where would I credit it? Cash, yeah, cash. Or if you've not paid it, it is what? If I have not paid for it, what is it? Credit what? Give me the name of it. Payables, correct. Okay, so now what will happen to this fixed asset is we will be taking it, right? Let us pretend this fixed asset, right, has 4 years. The life is 4 years, right? Life of the asset is 4 years. So what will happen? Life of the asset is 4 years. And there is something called depreciation, correct? We are going to do straight line depreciation because it's easy. What would we do? 100,000 divided by 4 years, correct? What would be the answer? Tell me. 100 divided by 4, right? That would be the depreciation charge. So somebody tell me 100 divided by 4, 25. Very good. This is my depreciation charge. Where would it go? There is an entry for this. Where would it get debited? Where would it get credited? Debit where? Debit depreciation, okay. Expense account, and that will be in your P&L, correct? And credit where? Accumulated depreciation, which will go into your balance sheet, right? So this is how our debit and credit works in a depreciation scenario. So we can have a straight line that is just simply divided by 4, or then we could have different other methods of depreciation as well, right? The way we calculate can slightly differ. I will give you some insight to this. Now let us go into, we've done some transactions. Now let us go into our slides just to see whether everything makes sense now. Okay, we've gone through 3 businesses, real estate, hotel, and a coffee shop, and see, how does this work? Let me just share the screen with you now. Recording of transactions. Let us see whether this thing made any sense now. Okay, right. So we spoke about sales day book, purchase day book, all these things yesterday, right? This is our famous double entry recording. Guys, remember, there has to be a double entry. Any kind of transaction, you cannot have a single entry, right? Always A debit and a credit has to be there, right? If you give something, you need to get something. If you give cash, you're going to get something back, right? So that's the principle. So we have something called the nominal ledger, where the ledger records all summarized transactions like what we said yesterday. Okay, so that's kind of what we did. Now here we go. Expenditure, debits, assets, debits, we saw that, right? Income, credits, liabilities, credits, capital, credits, right? Look at your financial transactions, the financial statements that you guys have got as well, right? In that you will see how the capital works, right? Now let's go to the next one. All payments, expenditure will, or the asset account, we have to debit. We did this now, just now we did an expenditure, we did also, we bought an asset, furniture. Cash, credit. All receipts, right? Income will be a credit, liabilities will be a credit, cash will be debit. And then we looked at the credit transactions, right? The credit transactions are expenditure, or the asset will get debited. The liability, or what we have to pay, will be a credit. From an income scenario basis, receivable is always a debit. And where would the receivables stay in the balance sheet? Where would the receivables stay in the balance sheet? What do you guys think? Any ideas? Current assets, very good. Very good, right? Current assets, and receivables is debit, income is credit, right? We got that sorted. Sales and purchases ledger. Individual accounts are not part of the general ledger, because we can't imagine if the Marriott Hotel had all these individual accounts in their general ledger, right? There wouldn't be enough, the size wouldn't be enough in the general ledger, right? So because of that, they have it separately. Sales, a sales module will be there, where they will record all, where will all the transactions will be recorded, and the balances will be transferred to your general ledger account. Okay, so let us go into the trial balance. Now trial balance is a beautiful thing where it has to balance, right? The trial balance has to balance. Now all the balances from your general ledger come and sit here, right? Doesn't matter whether it's a balance sheet item or a profit and loss item. So what it shows very clearly is whether you're doing a whatever transaction it may be, there's a debit and credit, we said. So obviously it has to balance, right? How all the transactions are funded, it is stated there as well. Now let us go into the next one. Now there are errors, of course, right? Errors happen even though we have computerized systems. Still there are errors, and errors can happen due to these reasons. Okay, and then we will also look at how we will correct these errors. Okay, now let us go into our presentation of financial statements. Now I want to find out from you guys whether you understood all this, right? So what did we do just now? I want to go into my whiteboard and just open up another whiteboard, okay, and say, let us take another color to say, let's take green. Right, what did we do today? We looked at different types of transaction. Right, and we looked at a real estate, and we looked at a hotel and a coffee, right, and coffee shop. Okay, now we looked at this, we looked at the income and expenses, right, income, expenses and assets, how to record it. And the debit and the credits. Is that clear for you guys? Is there anything that you want to ask a question about here? Anything here? Right, Pratik, I'll come back to you on that. Right, Mira says no. This is really important, so I need to be quite clear that you understand it. If you don't understand it, please come back and let me know. We'll go through it again. Okay, now what I want to do is quickly go into those errors, errors and omissions, and explain it a little bit. Okay, now one second, I'm sharing the screen with you. Right, complete omission of a transaction, that means I've completely forgotten to do the debit as well as the credit of a transaction, right? Let's say I bought something, right? I bought something, I did not record this transaction at all. Okay, that is one. How will I find out later? Is when I try to do a reconciliation, a bank reconciliation. That's when they will find out, oh, what's happened here? 500 dirhams is not there. What happened to the 500 dirhams? Not sure, right? So then we start reconciling. Really, maybe we would have bought something, and then people will start asking others, and then you say, right, okay, I bought something, I forgot to mention it, here you go. So when you start doing the reconciliation, that will come out, because in the bank this 500 dirhams would have been, it's gone, but you have not recorded, right? When you do the reconciliation, it will come through. Posting of a transaction to a wrong account, although the right type of account, it's called an error of commission, right? So posting of a transaction to the wrong account. So what can happen? Instead of putting it into salaries, they've gone and put it into stationery, okay, onto the debit side. So it's wrong. Okay, that's error of commission. We can have compensating errors. Error of principal occur when the wrong type of account has been used, right? Instead of debiting an asset account, or I have gone and debited a salaries account, right? That can happen. Errors of original entries, when the wrong amount is debited and credited to the correct accounts. That means, instead of 2,500, I have put 250. Correct accounts, but I've forgotten a zero. Okay, so all these type of errors can happen. Okay, and you can correct these errors via a journal entry. Journal entry is a fabulous thing, right? So in a journal entry, via a journal entry, I can record. I can say, well, in the journal entries are done in the general ledger, right? I'm doing a journal entry because to correct these errors, and there has to be very good documentation as well. In the sense, the backup documentation for the journal entries should be clearly stated. This is the reason why I'm doing these journal entries. So Pratik, is that clear for you? Or and the others as well? Is that clear? Okay, if that's clear, great, thank you. We will go to presentation of financial statements, right? Now, this is the presentation of it, and IAS 1 is one of the key things that kind of links to our financial statement. As per IAS 1, financial statements provide information about an entity, about the assets, liabilities, equity, expenses, changes in equity, cash flow, right? And who is responsible for it is the directors, right? They are the ones who are responsible for it. And you would see, have you heard of this story about the Enron scandal? Have you guys heard? Right. So, if you have not heard, or accounting fraud, yes, correct. So, here goes. Let us do a little bit of homework apart from your questions that you're going to answer, right? I want you to do a little bit of investigation, right? And look at what are some of the, I want you to do 2 slides for my next class, right? Where you will talk about what are some of the key accounting frauds that have taken place in the past 10 to 20 years, right? There are some key accounting frauds and actually what happened. In 2 slides, just give me 4 examples, okay? Because it's important for you to understand about the context about the financial statements, why is it so important, and also about the directors, right? Because they are responsible for this. If there is a misstatement, then who is punishable? The directors. And you could see a lot of people going to jail, right, because of this. And the reason is we have got other stakeholders who have shareholders invested, as well as other stakeholders who will get impacted by this company stating incorrect information, okay? So that's the reason. Components of financial statements, right? What's there in the financial statements? We've gone through that. Now, financial review, right? In addition, IAS 1 encourages but does not require financial review by management, explaining the main features of the entity's performance and position. You saw that in Honda very clearly, and even in our hotel financial statements, it was there, right? Factors, influences determining the performance, sources of funding, strengths of resources, right? You will see these things coming through. Fair presentation, right? Financial statement should present fairly the financial position, right? And there is a framework as well that they need to follow. And why would you depart from the standard? Sometimes, very rarely, you will have to depart from a particular standard, but that needs to be disclosed, right? Auditors need to be brought in, and it should be very clearly stated in your financial accounts, the published accounts, why you're departing from certain rules, right? And we spoke about going concerns, we spoke about accruals, right? And here again, IAS 1 require entitled entities to prepare their financial statement except for the statement of cash flow on accrual basis of accounting. So, What is accrual basis of accounting? Anybody? Anybody? What is accrual basis of accounting? Can you explain? Can you put it into your chat? What is accrual basis of accounting? Yes, recognizing a transaction. Right, recognize the transactions when they take place. Whether you have paid for it or not doesn't matter, right? So that's important. Now, let us go very quickly. Some of the requirements by IAS 1, right? We've gone through that before, so I want you to read through it as well. Statement of, one second. Yep. So in the statement of financial position, your balance sheet, you need to record all this as well, right? Very clearly, and you will see this information in your statement. So there are very clear requirements in the IAS 1, and it's all about your how to present your financial statements. Okay, so what I would ask you to do again is, there are two types of homework I would like you to do. The first one, I told you, please do a presentation, 2 slides about some frauds, accounting frauds. The second one I want you to do is to understand, basically research a little bit on IAS 1 and summarize what it says, right? And it might be a very, very long document, right? It is, but highlights, what does it contain? I want you to have a look at it, research it, and say, okay, this is where I got this information from, and this is what the IAS states. Okay, so because I want you to check whether the slides and the IAS 1 represents the same thing, and also look at the financial statement that you've actually got as an example. So in Miras's case, it was Honda. In Anastasia's case, it was the hotel. Okay. The current and non-current assets, it clearly states how it should be reflecting the current and non-current assets. Again, talking about statement of profit and loss. Okay. So we will do a little bit of research for next time on IAS 1, our financial statement that you've got, as well as the slides, and to see, does it all link together, right? So we also saw the notes to the accounts. I want to find out, is there any other questions that you've got? And I'm going to put a lot of questions on your Dropbox. Okay, so quite a few questions are going to be there in your Dropbox.